Well, good evening and welcome to another edition of Capital Market Live on Channels Television. We're going to be analyzing the first trading week of August. That's over now, and we're going to be moving into the other parts of August. But first off, let's kick off now with what played out with global markets that we track. We see for European stock markets, they opened the final trading day of the week in positive territory, with the stock 600 benchmark up by 0.24% after about 8:15 a.m. Then we see at the close of trade on Friday, the FTSE 100 did close in the green, 0.31% up. DAX in Germany, 0.69% higher. Then the CAC 40 in France, 0.17% up, 8,714 points. Definitely, we did see a lot of sentiment there, dragging the indexes up also for the trading week in Europe. Then we see for Asia Pacific markets, they were set to open mixed on Friday on higher oil prices after Iran published a restrictive draft plan for the Strait of Hormuz. Now we see the Japan's Nikkei 225 that was poised to decline, slightly. But if we move over to Asia markets, there we did see mixed sentiment. The Nikkei down 0.12% on Friday. The Shanghai Composite 1.02% higher, and the Hang Seng Index 0.54% to the good. Flip over to U.S. markets now. We see they were all up on Friday with a tech-heavy Nasdaq there, 1.30% advance for the trading day. It was also green for the whole trading week. Most of them were up about 2 to 3 to 5% for these markets. The S&P 500 0.62% higher. So it was great for U.S. markets. That's for this trading week, the first one in August. Let's flip over to commodities now. They delivered a sharply mixed performance this week, with precious metals rallying, while oil prices, that came under significant pressure, even though we did see oil rising from about Wednesday this week. For gold, the whole trading week was up 7.44%, breaking the $4,300 level. Then we did see silver there, $63.47 per ounce, up a full 10.23%. Actually, outpacing gold, because on some of the trading days there we did see gold outpace silver, but now for the whole trading week, silver did better, 10.23% higher. Then for oil, we see Brent there 9.16% down for the whole trading week. WTI big 11.20% drop there, closing at $77.07. Definitely on the back of de-escalation, but investors are still trying to understand what's happening around the Strait of Hormuz and the war in Iran, at this point. Still trying to figure that out. But that's the first trading week of August. That's how major commodities traded for this week. It was quite mixed right there. All right, let's move on to the equities market now. Ended the week marginally higher with bargain hunting in First Holdco, Zenith Bank, MTN Nigeria, helping to offset significant losses in ETI, Dangote Sugar, and Transcore. The NGX All-Share Index rose by 0.1% week on week to 245,573 points, taking year-to-date gains to 57.8%. Trading volume also increased by 9.1%, although trading value, that plunged by 64.7%. The banking sector led gains, rising 2.4%, while insurance and consumer goods stocks that came under a lot of pressure. So we see the low gainer for the week there, 2.3% advance. That's the banking counter. Then we see the likes of consumer goods, industrial goods, the rest, all in the red. But insurance there did drop a lot there, about 3.31%. All right, we see the Nigerian exchange, they're setting their sights even higher with the NGX Group CEO, Mr. Temi Popola, projecting that the market value of listed companies could reach 230 trillion naira, and that's by the end of 2026. The projection comes as the market has expanded significantly, with listed equities now valued at about 160 trillion naira, up from roughly 30 trillion naira in 2023. Mr. Popola says major anticipated listings, including the Dangote refinery, alongside sustained investor interest, could drive the next leg of growth. So quite an ambitious target there. Looking at the market cap projection of 230 trillion naira by the end of 2026. Well, we've seen so much so far, so it doesn't seem that far off, if you look at it from where we are right now. All right, let's unpack the trading week and some of the big headlines from this week. Joining me now is Mr. Kudus Adebar, is a research analyst at DLM Securities, and he joins me right here in the studio to analyze what has played out so far and maybe what to expect next week. Great to have you on the show.
Yes, you're welcome, sir.
Yeah, so quite an interesting target we have here. 230 trillion. That's what Mr. Temi Kukwala is saying the market value could hit by the end of 2026. What does this mean for investors if this actually happens, in your opinion?
Okay. In my opinion, I think this actually shows how strong the market is currently. And I think this value is achievable because when we look at by next month, by September ending, we should have some listing, the like of Dangote refinery will be listed. So adding that to the oil share index to the market, it's actually going to drive a whole lot of activities to the market. We've seen what happened in the likes of when we have the IPO played out at the particular time. Now the listing they have been preparing how to list the stock now. I think when we have the listing of the like of Dangote refinery coming on board, this target is going to be because the refinery now is actually beyond just Nigeria alone. It's actually something that can actually trigger what we call the African markets as a whole. So we have a whole lot of foreign investors apart from Nigeria and other. In fact, the refinery is one of the biggest and it's actually going to reshape the markets entirely.
Right, and we see the Johannesburg Stock Exchange. They were actually courting, the Dangote refinery, asking for a secondary listing, at this point. So we're seeing other, African exchanges showing interest,
yes,
in that listing too.
Yes, I think it's important. Just like what I said earlier, I said the listing of Dangote refinery is just beyond the NGX alone. It's actually about the African Stock Exchange as a whole. So, and where we see valued, comparing it currently now, we have a news going on that the refinery currently supply over 20% jet fuel for the Europe country. They can still do more with this expansion that we're still going on, given the view that the leadership for the refinery and other corporate bodies, the structure that was being put in place, I think is beyond just even African stock market alone. It's actually global because of the how the standard and how, because our target is actually to make the refinery the top one, like one of the best refinery in the world. So it's something that will actually drive our markets in a positive way.
Right, and hopefully we get other, big listings, too, because I believe we'd like to see other listings
yes,
after the Dangote refinery.
Yes, also, there's also a market estimate that probably in 2028, we can have the like of NNPC2 listing by that particular period. So it actually shows that we have some kind of strong investor confidence in the markets currently.
All right. All right, let's look at the trading week. That's the first one for the month of August. We did see it ended marginally up for the trading week, but we did see a lot of rotation, around sectors there. But the banking counter still managed to outperform, for the sectors that we track. What do you think really drove sentiment, this week, in your opinion?
Okay, in my opinion, starting from when we look at the top gainers that we have, I think one of them is the first HoldCo that we have. So, the major reason is due to the fact that the chairman of the bank, Mr. Femi Otedela, actually said he had this opinion of having a controlling unit of the particular bank, and these have actually give what we call actually give some kind of investor confidence in that particular sectors because his stake currently, I think we have over 26% stake, and that is above his target controlling unit of half of it is currently at the halfway. So I believed that because of the sentiment that we have a prominent shareholders in the like of one of the biggest banks that we have that in Nigeria, which is the First HoldCo. This actually give attention to the banking sectors. We've seen we are currently at the post recapitalization period, whereby banks needs to work more on how they use the new capital to gain a quality, to generate a good revenue with the new capital that they have. So the post recapitalization of the banking sector is something that is still remains strong, given the fact that even First HoldCo are even still just complete the second trenches of their recapitalization. And other banks who are trying to meet up, there is a market here said, okay, we have other banks like Sterling that may actually have this kind of share reconstruction and the like of things. So there are a lot of sentiments in the banking sectors. And just like I do said, that the banking sector are actually one of the bedrock to the to the Nigerian stock markets currently.
Right. But what do you think is happening with insurance? You know, they also had their recapitalization deadline. That was for 31st of July. So that has come and gone. We know the sector was rallying for the month of July. But now we're seeing a big pullback for insurance there, 3.31% for this week. Is this a sign of things to come for the insurance counter this month?
Oh, well, looking at the insurance sectors, yes. Currently, we have 43 insurance that have made up the recapitalization, while we have others that are still on reviewed. So although we have the likes that was claimed that they have actually met their recapitalization. But looking at the insurance in Nigeria, the sectors have been one of the sectors that I think need more attention because there is not enough confidence. Even looking at the lack of their business model sometimes, something that I think investors are still have to reassess it. Even this recent half-year result that was released from some of them was not really impressive. I think that is one of the reasons what's happened, and the kind of taking profits from the likes of the one that have actually hit, that have over 100% yet to date gain. I think that is just what's happened. I believe that with this recapitalization that we have, we could have a slight change in these sectors.
Right. So do you see any catalysts for this counter going forward? You know, in 2026, is there a catalyst there
yes,
that could actually drive it up?
Yes, one of it is that we have a turnover in their in the like of their earnings. So this can actually change the investor sentiment. And also, when you look at for income investors, majority of these insurance companies only pays like when you look at their dividend yield. So something small compared to the banking sectors. And this is actually due to the fact that their revenue, they insured a whole lot of like high cost and the other things like that. So there are still opportunity in the like of the insurance, given this recent recapitalization that we just have.
All right. So you know, going into next week, what are you expecting? What are you expecting investors will do, you know, in the market next week?
Okay, by next week, I think investors are currently assessing company based on their earnings. So one of the things that will actually drive markets next week is the previous, because last week we have a lot of rebalance in the market due to the fact that majority of the company released their half-year results. So I think this week in the sectors, in the market general, so we have some kind of rebalancing due to the fact that we have to do revaluation on stocks that actually meet the target price of investor expectation.
Right. And looking at the banking counter, we know First HoldCo again appeared top for the trading week. Is there still room for First HoldCo, in your opinion? It came in third there, closing up 12% for this week, 145 naira. Does this one still have room? Does it still have room in this month?
Well, yeah, I think one of the key drivers to the rally of First HoldCo is just due to the fact that the prominent shareholder buying the shares is actually one of the reasons why people are actually, and because of the confidence that they have in this prominent shareholder. So it's actually one of the key drivers. But I think it's important for investors to assess the company based on their dividend policy, valuation in general. look at the how their credit risk is being improved, and look at their capital adequacy and the rest. Investor just needs to revalue the stock, and just not just based on emotional, based on sentiments alone.
Right.
So because we have a prominent shareholder buying, let me to just buy. I think that is just.
I think you call that swimming with the whale.
Yes, yeah, exactly.
At this point. All right, we'll definitely keep watching that one, but we'll take a break now. When we come back, we'll analyze, what to expect with the new rules on the NGX. That's in a moment. Just stay with us. Welcome back. We're still analyzing the trading week and what to expect, going into this month of August. I still have with me Kudus Adebar, the research analyst at DLM Securities, still with me right here in the studio. Great conversation so far, but we have new rules, from the NGX. So it's the minimum price movement rules at this point. So they say if a stock price is around 1,000 naira and above, minimum trade volume will be 10,000 units to actually move the share price. Then if it's a 500 naira to 999 naira, you need 50,000 units volume. Below 500 naira, 100,000 units. Tell me about this. What does this change, in the market, in your opinion?
Okay, so in my opinion, I think this is the new, the planned NGS reformed on equity pricing methodologies. So, and I think this is actually important because it's addressed two things majorly: the market structure and price discovery. So, and I think the major reason for this is just to ensure that what's actually share price are actually driven by substantial units, like economical value transactions, not just small traded, small volume transaction. So I think it's important for us to have this minimum threshold just to increase, to have more effective price discovery, so that the market can actually shows the true or the genuine investor demand and supply. So let's just put it in that way. And there have also been this concern from the retail investors side that, this new reformed of equity pricing methodology is not good for us and the like of things like that. But the thing is that this is not to ban the retail investor from trading. Rather, it's just to actually enable the markets to give a very efficient price discovery. So and to reduce price disruption from small volume trade. So it's actually.
But does it stop pump and dumps? Is this what you need? Because we've heard of instances where just a few traders are able to move the price.
Yes, I think that is one of the concerns from the retail investors because majority of the retail investors, this is capital markets. So majority of them react to any small movements in the markets. And if we don't have this kind of reform, it can actually stop us from certain things, because you see, domestic and global foreign investors, institutional investors, need what we call a reliable pricing mechanism. Not just that any small volume trade can actually trigger the official closing price of any stock or this. I think it's actually nice for us to have this kind of reformed, in order to just actually have to qualify our liquidity. Not just small minor trade moving the markets, but rather to see the real test of this particular reform is just for us to see the true price recovery. That is just the key thing.
So I'm imagining a stock that's below 500 naira, per share. Does it mean we'll see, the markets now, a lot of stocks hardly moving in price because they don't meet the 100,000 units?
I think that's one of the effect that people have been looking at. That what if this thing? I think it's better because you see, a market with many small trades but unreliable price is not a healthy market. No, no, no. So we need a market that can actually be moved by a strong transactions that can actually move it. So this can actually give people to rely on the pricing mechanisms that we have in the market. So if any stock could not actually meet that threshold, but if it does not move, I think it's because we now have a substantial, a reasonable amount of demand and supply for that stocks. And I think it's better.
So this could impact some stocks negatively?
Yes, particularly the tiny traded stocks. The tiny traded stock will be affected in short term, but in long time, it will give a very good price discovery for them.
Right. So if they don't get this threshold, then they'll definitely stay at that price.
Exactly.
For a long time, except there's huge demand.
Yeah, exactly.
For that stock, going forward. So I guess they have to, put on their thinking caps.
Exactly.
At this point for stocks like that.
And it's actually also assist retail investors to focus on valuations of stocks rather than just chasing any small movements in the stock price. And we have seen a lot that happened last week in such a way that a particular stock gained today and tomorrow, just a minor change within the price. The next day we have seen it's going the other way around. So I think it's because people don't actually know how to value stocks. They don't know how to value a company very well. And I think this reform will actually let the retail investors to look into the aspect of how to actually value a stock rather than just chasing any small movements in the stock
So I guess
price.
all those meme stocks and zombie stocks, as some people call them,
yes.
they might not get any attention in this period. All right, let's move to another matter now. Another headline this week. We've talked about the recent moves with Mr. Femi Otedola, but he did buy 18 billion naira worth again, recently. And you did talk about, investors you don't follow blindly. Because you see the big investor moving, and you're now, following and also, buying. But this seems like a really strategic move, in my mind. Another 18 billion. What does this mean about his, how he believes in this stock? What is this showing us?
Well, it actually shows the level of confidence and conviction that he has for the company. And I think First Holdco in general need someone like him in that particular aspect, because looking at one of the objectives is looking at the NGX capital restore plant that I have. So I believe in these banking sectors. He is also knowledgeable in that particular, and he has seen something that probably majority of retail investors could not even see, and he's actually have a very good plan on structuring the banks as the company as a whole. So I think it's important for him to do that.
All right. So going into next week, we're still expecting more earnings.
Yes.
At this point, some of the other big banks, they're supposed to release their earnings come next week. What are you seeing, going further, for these, tier 1 banks? Do you think the earnings are going to beat expectations? What's your expectation going forward?
Well, it's most likely that we will have a bigger earning due to the fact that looking at the interest rates is still at the high side, the lending rate is still currently at the high side, and yes, I believe that we should have something like that, a better earnings. And also one of the things that could actually assist them is that their dividend policy also. If some of them can actually increase their dividend, because of this recapitalization have actually caused share dissolution. So investors, people that have been saying, let's say for example 5 naira as dividend before, they will not want to expect to get something lower, even though some did not even participate in the recapitalization program. So I think these are things that
All
will assist.
Okay, we'll keep looking forward. It's just a few days to next week. Kudus Adebar, research analyst, DLM Securities. Thank you so much for coming on today.
Thank you very much.
All right, and that's the show today. Definitely hope you have direction. Going into this next trading week. Remember, the plan is always to buy low and sell high. Thanks for watching. I'm Ladi Williams. Bye for now.